Hello, ladies and gentlemen. Good day and welcome to the show. Today is Friday, the 6th of November, 2020. And, there is an election going on in the United States, and I said to you guys, this started a while ago, I said the worst case scenario would be a tie vote. Well, we still don't know what's going on and who's won this thing or anything. It's just like it's all up in the air right now, But there is a good thing. I was very worried that there would be massive civil unrest if there was a tie or whatever, and so far things are remaining kind of quiet. Now, I'm going to tell you guys what. If we can get through this whole election cycle, and if we start to move into next year, I think things are going to get better next year. In fact, I think we're in for an economic recovery by late summer next year. All this stimulus money is the reason why I think this. That stimulus money, is going to start to filter its way down through the economy, and they're going to start doing what's called fiscal stimulus. See, they've been doing monetary policy for a long time, and it's getting to the point now where it's like pushing on a string. That's what we would call it, pushing on a string. In other words, it's having little or no effect, monetary policy. But now they're getting ready to move into a new endeavor. It's called fiscal stimulus. And it's where they put money directly into the Main Street economy. And they're getting ready to do this through a process called central bank digital currencies, where the central bank can basically then they have the right to just pump out money left and right and center. And that's fiscal stimulus. And this is all part of what's called modern monetary theory. And what they're really hoping to do is restrain this money making by raising taxes. But that ain't going to work. All that's going to do is put an unnecessary burden on the middle class. And the middle class just not going to have the money to pay it. Do they really expect the middle class working people out there to pay for all of the people who's lost their jobs? Well, and then they're going to give that money to the people who's lost their jobs. It's going to make the people who's lost their jobs richer than the people that are working, because if they're going to tax them extremely heavily, the people that are working, that's like they're not making any money, and it's going to be all going, and that ain't just going to work, because ultimately they'll quit working. If they see that they're actually going behind working and they could move ahead if they were quit working. I mean, this whole thing is just an enormous mess now at this point. I sit there and I think to myself, why would they want to be president in this mess? I mean, I can understand why a person would want to be president if the situation, you had a good, strong economy and America was moving forward. But this, when America's ready to collapse, whoever takes the presidency is going to be moving into the same position that Nero was in when he fiddled while Rome burned. That's where we're going with all of this. Anyway, let's get the charts open and take a look at what's going on. Start the charts right here and take a look today at the silver price. It's up 12 cents, 25.48. Now, with all this new money printing, and I think it's only going to accelerate into next year, they can't stop, guys. If they stop, the entire system will stop. It won't just crash. It won't just be a meltdown. Everything will go bankrupt if they stop printing money now at this point, because the system is so over-leveraged. They cannot stop. And they're going to have to keep imprinting ever-increasing amounts. And there's only one direction this can go. I actually shouldn't say they can't stop. Yeah, they could stop. But the whole system would stop, and they would lose control. We would go into some sort of a, I'm not going to, it would just be total chaos everywhere in the whole earth if they stopped, and they would lose control. There wouldn't be any governments, basically, because everything would stop. And once you lose control in a system that's this wide and expansive, how do you gain it back again when everything goes crazy? You can't. It just disintegrates. eventually law and order would be restored again. But how many people would be left? You know, I mean, it's ridiculous to even talk about it, and that's what would happen if they stopped. So they can't stop. And so for these guys out there saying, oh, it's going to be deflation, it's going to be deflation. No, they're going to keep printing to infinity and beyond. And, you know, at first, they're soothing their conscience by saying, okay, we'll collect it back in taxes. But I think they must know. They must know that they can't tax the people that heavily because of the outstanding debt. You know, they'd have to tax everybody 100%. Give it to them with one hand, take it away with the other. They can't do that. They're going to have to drop the whole tax notion in the end. You know, they're going to have to, if anything, part of fiscal stimulus is going to be lowering taxes, not raising them. I mean, that's just a cop-out, them saying, okay, we're going to raise taxes. That's so they can get these programs in. Once they get these programs in, they're going to find raising taxes is just not a viable solution whatsoever. Why don't they just get over it now? Just get over it. All these guys out there who are conservative and saying, okay, we're going to balance the budget and all this kind of stuff. Just get over it. It ain't going to happen. You ain't going to balance the budget. You ain't going to reduce this debt. The debt's only going to increase at this point. This thing's gone exponential now at this point. It's all over. We're going to a hyperinflation. And the real crisis is not what we're going through right now. I think we're going to bounce back from this, from what we're going through right now. And I think we're heading toward a recovery next summer. That recovery is going to be the crisis. That recovery is going to set the hyperinflation in motion. And the hyperinflation is going to be the real calamity. Because ultimately, when you get to the end of the hyperinflation, there's a transfer of wealth that happens rather quickly. Once it happens, everybody panics to get out at the end, at the last bit of the hyperinflation. And that's when, you know, it's unlimited how high these other asset classes that are hard money can go. It's unlimited how, and you know, if you guys don't know what I mean by hard money, it's this right here. Silver and gold. It's hard money. And it's unlimited how high once the wealth transfer occurs. At the end of the hyperinflation, it's unlimited how high these can go, but that disruption that it's going to cause, we'll be very lucky if the system remains stable during that period of disruption. And what I mean by stable system is, I mean, in other words, instability is going to come on a massive scale when we go through that wealth transfer, because you're going to have actually hundreds of thousands of people who are wealthy becoming poor, and a whole new crew of people who are poor becoming wealthy. And it's a wealth transfer in the system, you know. And for the people who aren't ready for it, they're going to lose everything in this wealth transfer. You got to be in hard assets. Honest to goodness, you need a certain percentage of your portfolio in hard assets like gold and silver. So silver's at $25.47. Gold today is at $19.50, and it's up $1. Looking at cryptocurrency, and I consider cryptocurrency to be a hard asset too. A hard money, just like gold and silver. $444.6 billion for Bitcoin. Bitcoin is a premier coin of the cryptocurrencies. And I think it's going to remain the premier coin. $15,489. So look, Bitcoin's getting up near its all-time highs. And what it's doing this time, last time it raced up to its all-time high, like a bullet, like when you shoot something up, you know, what goes up has to come down. This time, it's slowly taking a stair step to a time up to its, and it's establishing this much more, it's establishing these prices much more than it did when it roared up to 20,000. This time, that was like a manic buying. It was like, this time, that's not what we're seeing. This time, we're seeing Bitcoin slowly take the stairs up to where it's going, and it's much more stable, I think, myself, you know, than it was before. Dow Jones Industrial Average today is down 78 points. This market is oversold. And it's ready for a monster of a drop. A crash, even. But I'm going to tell you guys what. They keep pumping the money out there, and a crash is not guaranteed. Because if they keep pumping the money out there, and the Fed keeps printing more and more and more, this market could go up to infinity. Because it's priced in dollars. And that if the dollar goes to zero, this market could go as high as you want it to go. I mean, you know. Let's take a look now at crude oil, and it's down $1.21, 37.58. So with all our efforts to maintain crude at $40, they're not being able to do it. The price is dropping, sinking on it, bit by bit. Bonds and rates today, we're looking at raising bond yields. It's up 4 basis points in the 10-year. It's at 0.81. And we're looking at the 30-year at 1.59. It's up 4.9 basis points on the day. Now let's take a look at our MOVE index. And, you know, we saw a drop in the MOVE index. This is manipulation, I would say. It doesn't even look natural on the charts. It just looks like a sudden drop in the MOVE index. And it's quite substantial. It went from 64.37 down to 43.79. So they did something here to drop this MOVE index. Let's take a look at the U.S. dollar index now. And we're looking at the dollar losing a bit of value today. It's down 92.24. It's probably going down on the market front-running a Biden presidency. Even though the votes haven't been counted yet and everything, you know, they're still in the process of figuring this thing out. Still, you know, the market will front run these things, guys. Okay, let's take a look at our funny picture for today. Now, this is coons, what's called a raccoon, you know, and I'm going to tell you, an awful lot of people find these animals really cute. Now, myself, though, when I was just a little boy, I had a traumatic experience with a raccoon, you know. So I'm not so much in the cute camp of them. They can be real rascals, you know. They can be real rascals. And you see the hand they got? It's just like a little human hand. They can grasp things in that hand, you know. And they can open things. Like if you got, say, a shed door and it's got a latch on it or whatever, and the latch is down low where they can get a hold of it, they can open the darn thing up, you know. Their hands can grasp things just like a human hand. In fact, it looks a little bit like a human hand. Anyway, listen, you guys, thank you for listening to my show. Like and subscribe. Give me a thumbs up. We'll catch you guys in the very next episode. Bye-bye.